Welcome to Big Four Accounting Firms Podcast, brought to you by BigFourAccountingFirms.com. Today we are going to be discussing Big Four culture, values, and how their structure determines how the culture and values are implemented. A lot of people ask about what are the cultural differences between the Big Four, because they think that that's going to give them the shortcut on which firm they should choose. A lot of people think that they're going to figure out how the Big Four fits their personality. They think they're a certain type of person, like I'm fun, outgoing. So which of the firms is fun and outgoing, or quiet and introverted? Which firm is more towards that? Or I like to be socially responsible. Which firm does a lot of social responsibility and charity and volunteering? So today we're going to be going over the values first and how that affects the culture. And then we're going to be discussing my thoughts of how those values are actually reflected in the day-to-day work of working at the Big Four. Okay, first we're going to be going over values by firm. And these values are public information. They're on each firm's website. And a lot of people don't even look at the values. A lot of people that work at the Big Four, I've worked at the Big Four, that you don't even know the values because they tell you all about the values at national training. But then after that, they don't really talk about them too much. And I'll be talking about that a little bit more later. But first, let's go over Deloitte. Deloitte's values are integrity, outstanding value to the market and clients, commitment to each other, and strength from cultural diversity. So let's just focus on this for a little bit. Integrity, I think, is important as an accounting firm, as a lot of the controversies they face. And being a CPA firm, people expect integrity when you're looking at their numbers and when you're vouching for the numbers. And also you're protecting the public by vouching for financial statements and auditing them. Outstanding value to the market and clients. Obviously, if you're in client service, you want to be providing the best value you can to your clients. Commitment to each other. That's just holding each other responsible for providing the best. And then strength from cultural diversity. A lot of the firms are going to have this, as we'll see. Diversity is important. They don't want these companies to become all old white men, because that's the perception in the marketplace. Next, let's go over KPMG's values. KPMG's values are that we lead by example, we work together, we respect the individual, we seek the facts and provide insight, we are open and honest in our communication, we are committed to our communities, and lastly, above all, we act with integrity. Let's go right to PwC. PwC's values are act with integrity, make a difference, care, work together, reimagine the possible. Okay, from there, let's go directly to Ernst & Young. Ernst & Young's values are, we are people who demonstrate integrity, respect, and teaming, people with energy, enthusiasm, and courage to lead, people who build relationships based on doing the right thing. Okay, so from that list, KPMG obviously had the most values, and all of their values started with we. So they're obviously about working together, at least from a global firm standpoint. And they have integrity. All the firms have integrity listed as their values. So since they're in the public marketplace, providing assurance for the public marketplace through auditing financial statements, they all have this, we're going to act with integrity. They don't want people working there that don't act with integrity. As far as all the other ones, they differ on the other values, but all the Big Four have integrity as one of their values. And a lot of them also have working together. So working in a team and things like that. But astonishingly, Deloitte is really the only one that has diversity listed as a value. The other ones are more speaking to working together and making a difference, caring, seeking the facts, providing insight, but they don't really mention diversity, which is pretty interesting. As on our website, if you visit our website lately, you'd see that KPMG just settled a sort of discrimination issue in New Jersey where there were Asian candidates interviewing for jobs in New Jersey, and they were denied because of race. Some of them also have commitment to the communities, and PwC calls it caring. But they all have different values, but mainly the ones they focus on are integrity, obviously. And some are short and some are long. KPMG had the longest. Ernst & Young was very short and didn't really highlight what they were about necessarily. So, you can tell how much these matter by how much the firms put into them. If you go to the values websites, they're not too detailed. They're sort of high level. And this is what I wanted to speak about. because I think this really impacts the work at the Big Four and how you'll fit in the Big Four and what to keep an eye open for when you're interviewing for the Big Four or you're looking into groups, or maybe your group is different than you thought the firm would be. Maybe your group is different than what they told you in intern training or training overall. And it all has to do with how the Big Four are set up. They're set up as these partnerships, and they're not really corporations. They have the structure of a corporation, but they're not really set up as corporations as far as there's like one CEO at the top and everybody does what he says. There's little fiefdoms and kingdoms, and everybody's the king of their own little kingdom inside of the Big Four. So I'll give an example. If you think about New York, and then within New York, there's financial services, and within financial services, there might be other groups such as asset management, banking, insurance. If you break it down from that perspective, the person in New York asset management is in charge of their own group, and they're sort of the king of that group. The lead partner of that group leads everything related to that group as far as the firm is concerned. Any message the firm pushes down is up to him to adopt and implement. And this is where you run into problems with values and culture and integrity in the Big Four. That you go to these national trainings, which is paid for by the firm nationally. All the partners within these groups put the money up for their people. Partners in the group, so in our example, it's the New York asset management partner. He pays the firm for training his employees. When they come back, that doesn't necessarily mean that he got the training as well. That doesn't mean that he knows what he's supposed to be pushing to people. He does receive the same emails with values in them, and he has access to the website that has the values, but it's up to him as to whether he values those values or implements the values. He doesn't have to. He doesn't have to reiterate them. He doesn't have to put them up anywhere. It's up to him as to how they're adopted. And this is how these firms get in trouble. It's because you'll have a partner that is not so keen on acting with integrity or providing outstanding value to market and clients. They're more concerned about themselves and their own pocketbook and work-life balance. They want to spend more time at home, so they take shortcuts or they do the wrong thing. And the lead partner of the firm isn't necessarily checking in on all these partners and saying, hey, are you distributing these values to people? And are you reminding your people of values? All these partners operate independently. And that's how one group can be completely different than another group. Some of these old school groups, like auditing groups, they have really old mind frame, and they're sort of do it how it was done prior year mind frame, while advisory or any technology type of group might be more forward thinking and have, you might operate differently. And it's because all these groups operate independently and they have their own independent leaders, even though there is a national firm. So you're going to Kpmg National, you're joining Kpmg or Deloitte or Ernst & Young, and you think you're joining that company, but you're really not. You're joining a sort of regional firm. And it's because they're so spread out and they're set up in this partnership structure that you see this. And so you can have these groups where there's very bad culture, gossip, and all those things take over. And you also have to think of the average age of the Big Four. The average age of the Big Four is very young. It's in mid to late 20s. So you can have this culture of developing cliques and gossip. Meanwhile, the firm says to value commitment to each other or strength from cultural diversity or commitment to our communities. That might not be valued in that group. That might be more of, let's go out and get a happy hour and let's all look out for ourselves and we're all competing for the promotion. It's these cultures develop that become more similar to Lord of the Flies than something where it's committed to our community and integrity. And it's just because they don't tell these line partners, these partners that are in the field. In our example, it was New York Asset Management. They don't tell them on a monthly basis, on a weekly basis, hey, here's our core values and make sure your people are adopting them. And, also here's our goals and make sure people are adopting those. They say, here's what we have at our level and make sure you do that. But we're not going to really have any checks and balances to make sure you're doing that. So to summarize what we've gone over today, it's just to remember that even though you go to some really great national training or really great national recruiting events, it's not necessarily how you're going to experience the firm in the specific group you go in. And it's also like, just because you experience something different in a group, it doesn't mean that another group in that same firm doesn't act differently. Every group is different inside of these firms because that's how they're run. The group's culture takes on the culture of the partners in the group. So if you have a partner that's in very early, stern, and conservative, then the group is going to lean a little bit more conservative unless that partner's never around. And if that partner's never around, then it's going to adopt the culture of the next highest person. So that could be a senior manager, a director, or a junior partner. And that's how culture is adopted. Additionally, if the partner is liberal, the group might also develop a more liberal view. And if they have no rules, if the partner is a very immature partner, which I've seen many times, then the group will adopt that same immature value. I guess that's another point to make, is that when you're choosing groups, figure out who the lead partner is of that group. Try to get an interview with them or a discussion with them or a coffee break with them and see if they're similar to you and your values, because that's going to be the values of the group. And also check if that person is frequently in the office, because if they're not in the office, then their values might not be the values of the groups. The groups might have adopted a different set of values. But just be conscious that every group within each Big Four firm can be different. And you need to do a little bit of research on which group you're going to join to see whether your values fit with the firm values. And you also need to do a little bit of discovery on what you value as a person so that you know what to look for in your potential Big Four group, or to see if you fit in the Big Four group you're currently in. All right, that's all we have for today. Thanks for listening. Make sure to subscribe to this podcast and share it with a friend. Also, make sure to visit our website, big4accountingfirms.com. Thanks for listening.